this channel is changing, and you guys can obviously see that maybe there have been some minor changes to this channel, but I really want to get your input on that. But first things first, we're going to talk about Robinhood and Webull and all of these companies that provided free commissions first, and are they in real danger of being bought out or merged into in 2020? I'm going to give you my thoughts and why I think that might be true, and just who might end up buying these companies. All that and more coming up. So what's going on, guys? Welcome to Own the Chaos. This channel is specifically dedicated to the stock market and the world of finance. It can be a crazy and chaotic place, and I've made it my mission to help you own it. So if you want to see more content such as this, I encourage you to subscribe to this channel, hit that notification bell, and if you are a fan of just the crazy and chaotic world of the stock market and companies taking over other companies and just the dynamic of where things are going in this day and age, give me a thumbs up. I would appreciate it. So Robinhood, everybody loves them as far as millennials are concerned. I've never been a fan of them, as you probably well know if you have ever seen one Robinhood video on this channel, for an array of reasons. And, you know, those reasons spread from them not having the adequate tools and resources for people to make informed investing decisions. You know, it really is just a platform to buy and sell stocks. That's it. You got to go do your resources and everything else on a different platform. Find your resources, use those tools as far as technical analysis is concerned somewhere else. You know, Robinhood just does not have the capability, and they still don't. But somehow they have still been able to generate 10 million users, an valuation of $7.6 billion as of December. And why is that? How can a company that doesn't charge you a commission, doesn't charge you to make trades, actually make money? And how Robinhood's able to make all of that money is routing your orders through other brokerages. Called pay for order flow, and that is how they make money. 55%, according to an article by Forbes, 55% of their revenue is made that way. So the business model that Robinhood has subscribed to is just volume, just getting as many people as they can onto their platform and getting as many people on their platform to actually use it. Now, I told you guys that they have 10 million users on their platform, which is incredible. They're a company that just started in 2013, and they have 10 million users. It's pretty amazing to see how they've evolved really quickly, especially in this space where it's so highly competitive. There's such a huge barrier to entry, and it's just been a really amazing thing to see. And that's just the beauty of millennials, right? You offer them anything for free. You put something shiny out there, and tell me if you've seen this before. They have millions and millions of users. It's a free app. You pay a really small amount of money for whatever service that's provided. The company is making revenue out the ass, yet year after year, they are incurring larger and larger losses. Of course, you guys know that I might be talking about Lyft or Uber. And the most recent casualty to this is WeWork. WeWork didn't even make the IPO because the company's doing so poorly. SoftBank actually has pulled back a lot of their venture capitalist funding. And a lot of that, I think, just comes down to a spending problem. But I think Robinhood's case is a little bit more unique. Yes, bringing in the volume could, in theory, bring in more revenue, and they are supposedly valued at $7.6 billion. But the problem comes here when you have the bigger brokerages that are now buying other brokerages, such as Charles Schwab and TD Ameritrade merging, where Robinhood has to be asking themselves, are we in trouble? Can we come out of this on top? And for me, I don't think the answer is yes. Only way that Robinhood survives is if they merge or allow themselves to be bought out by another company. And the company that I think that could benefit the most from this would be E-Trade. You see, E-Trade is in a lot of trouble already, because if this merger between TD Ameritrade and Charles Schwab does go through, which I think will probably end up happening, if they don't, each company will have to owe like $1 billion or something like that. It's a really crazy fine for backing out of this acquisition. So no doubt in my mind that'll happen this year, which means that E-Trade is in a heap of trouble, because now they are competing with the likes of this giant, which is Charles Schwab, and now they have Robinhood, who is also a competitor and growing at a rapid pace. So where does that leave E-Trade? Well, E-Trade is in a unique position, I think, because if they were to merge with Robinhood, as I stated before, has no powerful tools, has no powerful resources for traders or investors to make actual educated decisions, right? They have to go outside of the platform to make those decisions, whereas E-Trade has those. And if I was E-Trade and I was in trouble and I wanted to make sure that I stayed competitive, and I saw this emerging company that maybe didn't have it all there, and I'll get into that in a second because there are more red flags with Robinhood, didn't have it all there, but, you know, had a powerful platform that provided investors and traders with good tools, good resources, and had free commissions as well. And now, my business has changed so much because the landscape has changed, and now I need volume. I need users into my platform. So it would only make sense that I think that the survival of E-Trade could depend on them, acquiring Robinhood or acquiring even Webull at this point, or both. Let's just say that happens. And E-Trade's no stranger to, acquiring companies either. So I think that this could definitely be a possibility. It's either that or E-Trade allows themselves to get bought out by a larger company. And maybe it ends up being a company that, allows E-Trade to keep their brand, but it could be something like, BlackRock or Vanguard or something like that. But it's interesting to think about, right? And I'm sure there's a lot of people that are out there that are Robinhood fanboys or fangirls that they just can't, allow themselves to fathom that Robinhood could be a part of another company or be bought out by another company. But here's the thing, okay? Here's a couple of red flags that I kind of want you to consider and think about. According to Fortune, put out an article here in December, actually, it's a month ago. Robinhood's head of product department, barely a year into a term that can coincide with a series of high-profile bungles. Company's missteps have included announcing a savings product that would pay 3% interest, only to walk back to news after regulators warned it would be illegal. Product then came back out with a 2% rate, which is much better. More recently came to news of potentially catastrophic bug that let users trade unlimited amounts of margin accounts. If you guys recall that was a huge thing. Graham Stephan had a video on it. There was a poor kid that took like $50,000 and then watched it all go down the drain because he took an options call that didn't go his way. Poor kid was crying on there. I don't know why he ended up putting that up on YouTube. But you get what I'm saying here. Not only that, but they've also been in, some pretty sketchy, routing, this order flow issue has been a problem. We've seen orders not get filled the way that they should be getting filled, and FINRA just fined them over $1.25 million because they weren't engaging in best practices for you. If you were a Robinhood user, if you trade on Robinhood, they weren't looking out for the investor. They were looking out for themselves and not actually doing what FINRA requires them to do, which is to look for the best possible deal when it comes to order flow. Now, if you don't know what I'm talking about, again, Robinhood takes your order and then sends it over to a brokerage or a broker dealer to route your order to actually be traded on the stock market. So Robinhood, in a sense, is the middleman. They facilitate your trade. They're not a direct market broker or anything like that. So they facilitate your trade to that direct market broker, and then they make that trade for you. In turn, that direct market broker pays Robinhood for that order. So then what Robinhood's responsibility is to make sure that they're getting the best deal for you so that you don't notice those inconsistencies when it comes to market orders and making those appropriate order fills. So FINRA comes out, slaps them on the hand and says, hey, you can't do that. But then it also raises questions of, how ethical and how good is Robinhood's product really? And I don't know how I can't get this wrapped around people's heads. They gave me such a hard time when I came out with several videos regarding this topic about how terrible it really is for people who are using this. And then the rebuttal is, well, they're giving me free commissions, so I'm okay with them taking a little bit off the top. Like, that's the logic. But they're not abiding by the law. They're engaging in unethical practices here. So I don't understand why people have a hard time wrapping their head around that and rationalizing that. But now the playing field is level. So again, we go back to this question. Can Robinhood sustain this? And I don't think they can, given the fact that now Charles Schwab is merging with TD Ameritrade. And now E-Trade is standing by itself wondering, how do I get the volume that I need to sustain my business? Because if you look at this here, when E-Trade went to zero commissions, Charles Schwab, they benefited the most from this, or they were impacted the least, I should say. They were impacted the least. If you look at these numbers here, Charles Schwab, they lost $90 to $100 million in revenue when they went to zero commissions, but it only affected 7% of their overall revenue because their business model is in a way that they have all kinds of other long-term investments, and they have big fish, meaning that they have clients that have tons of money, but then they also have little fish, which are people like you and me, essentially, that are retail traders that don't have hundreds of millions of dollars to invest. Whereas Robinhood, all they have is little fish. And E-Trade, you know, and TD Ameritrade, I guess I should say, took the biggest hit with a 24% loss in revenue. E-Trade coming in with 16%. So they're trying to make up for that revenue. And the only way to do that is with just more people. So the more trades that get made, the more people that come in and use their product, that's what's really ultimately going to help them in the long run. And so I keep going back to this. How does that happen? And the only way that happens is if they join forces with another company, because Robinhood doesn't have much else to compete on at this point. You have TD Ameritrade / Charles Schwab that now also offer free commissions, but then they also have powerful tools and resources. Thinkorswim is the most powerful resource or tool out there for anybody looking to trade on stock market or and getting to any kind of investment. Thinkorswim is it. There isn't a better platform out there when it comes to just how much you can do with it. Now, there are other platforms out there that provide you with a little bit more, but also don't have the things that Thinkorswim has. So Robinhood's got to do something. There's no way that they're going to be able to just whip up a platform like Thinkorswim and still be able to compete with them. If Robinhood had that, done deal. They would have crushed the competition at a much faster pace. But now it's like we need something to be able to compete with the likes of Charles Schwab / TD Ameritrade. And the only thing that just makes the most sense to me is E-Trade. I also want to hear from you on a couple of things. I want to hear from you. Do you agree with me? Do you think that an E-Trade Robinhood merger makes the most sense, or an E-Trade Webull, maybe even all three of them merging together makes sense to actually be competitive in the space that they're in now, because the industry has just been turned on its head thanks to Robinhood essentially? Or do you think that Robinhood still has something in them to be able to stand on their own? I really want to hear from you guys. And so also, obviously, I've changed the tone a little bit about my channel. This is a little bit of a different approach to how I was thinking about taking the channel in a certain direction. Now, I'm still going to go over things like, you know, how much money I was able to make trading on a particular day. I know you guys like seeing those videos. I also know that you like seeing the videos that are more instructional on how to use certain platforms and stuff. So none of that's going away, but I like changing things up a little bit. I like evolving and being more professional. This YouTube thing is something that I absolutely love to do. I don't do it for the money because really YouTube doesn't pay anything. So if you guys like this is something that I love doing, that I'm kind of opening myself up to you guys for. So if you like this, if you like the fact that, you know, I'm giving this a little bit more of a podcast feel, maybe I can just do this once a week where I go over an important topic that you guys want to hear or you want to go over. And if that be the case, leave some comments below. I really want to hear from you and get your thoughts on this whole idea that I've come up with, this theory that I think that Robinhood's going to be bought out by E-Trade. I really want to hear from you. And more importantly, guys, if you like this video, I certainly would appreciate a thumbs up. It continually shows me support. You guys have been great up to this point in my YouTube career and how this is all transformed over the last several years. So I certainly appreciate the support, and I would appreciate you, again, just subscribing and hitting that notification bell if you want to see more content such as this. And that's going to do it for me, guys. As always, I will see you all before the bell, and B. Smith is out. In this video, I'm going to talk to you about the VWAP, or volume weighted average price indicator, and how you can use it to become a better trader. All that and more coming up.